You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together, shall we? Because it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you have been enjoying yourselves this week. Hope you're having a great trading week. Hope you're ready to bring it to a close here with the old Vol Views. Remember, if you like what you hear this show, anything else we do throughout the week, some cool new stuff maybe coming to the network sometime soon as well. So keep an eye and indeed an ear out for that. If you like any of it, throw a like, a star, a comment, wherever you get our content. It's available just about everywhere under the sun these days. And that does help new people continue to discover the content. We all know those new people are legion these days. They need a place to turn. Give them a helping hand. And of course, if you want to give yourself a helping hand, you want to go above and beyond, you don't want your broadcast week to end with Volatility Views. You want to come back for some great exclusive pro content right after Vol Views, including a little bit of options oddities. Then only one place to go, theoptionsinsider.com/pro, the place to go to learn more. As we learn who's joining us on the old Volatility Views program today, shaking it up a little bit out there. Some of our usual panelists on assignment, but never fear, we've got a great stand-in this week. First time on Volatility Views, Mr. Scott BAUER, the Chief Executive Officer over there at Prosper Trading Academy. Scott, welcome to Volatility Views.
Hey, Mark. How you doing?
I am doing great. How are things in Prosper land?
Things are great. Busy week, which is always a good thing.
That's good, because on the surface, it's kind of like a paint drying week. So I'm glad things are rocking and rolling over there. As I mentioned, this is your first time on Volatility Views. You have been on some other programs like TWIFO in the past on the network. But for a lot of our listeners coming to Vol Views, this may be the first time they are hearing your voice, Scott. So really quickly here at the top of the show, give them a bit of an overview of your background in the world of options and volatility, as well as what it is you do day to day over there at Prosper.
Absolutely. I started trading on the floor of the SIBO back in '91, probably well before many of your listeners were even born, and traded there for a very long time. Was partners in a pretty large option trading firm, BOTA Capital Management. Went to work for Goldman Sachs, running their S&P 500 operation there on the floor. And my specialty trading is volatility. After my tenure at Goldman Sachs, went out and started Prosper Trading Academy, an online education firm where we teach people how to trade, and we trade live with them in the markets.
And Scott, they didn't prepare you for this. I'm going to throw you a curveball, but it's a fun curveball here at the top of the show because yesterday was Leap Day, of course. So this is now the first of the month. So quickly here at the top of the show, I'm going to give you a fun bonus, Scott. Are you ready?
I'm ready.
All right, because we have all of our pro members out there. One of the fun things we do with all of our pro members is we have a drawing at the start of every month to see who won the Pro Trading Crate for last month. So I just spun up our random number generator. It is now flickering on my screen as we speak. So what I'm going to need for you, Scott, is just to say stop whenever you feel like it. And then that will now pick our winner. So they don't get mad at me. They get mad at you. It's great if they don't win.
All right.
So whenever the mood strikes you, Scott, just tell me to stop.
We can just extend this on for a while.
Okay.
Or
All right. I see what you're doing. All right. So we'll keep it rolling. And listeners will be on pins and needles as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the program where we break down the week that was, and indeed still is, from a vol trading and trending and analysis and all sorts of fun perspectives here. And coming into the start of the show, hope you're feeling bullish because that's pretty much what we got in store for us today. After a week where the markets were kind of meandering, they were kind of up, they were kind of down, they were kind of unched. We're having a hard time really finding their footing this week. Coming into the end of the week, the bulls are firmly back in charge. S&P up nearly 2/3% right now. The Dow up about almost 0.15%, and the NASDAQ up nearly a full percent out there. And let us not forget our old friend small caps. Let's go out there as well. That's up a full 1% as well. I know we were talking yesterday on the TWIFO program about size opening for 1 day to go on the 2100 calls in small caps. Doesn't seem like they're going to get there right now. They're at about a 2058. But hey, you know, crazier things have happened out there. We need quite the run by the end of the day, but we shall see out there. That's, again, the 0 day and indeed near-dated madness that is obsessing the markets out there. Of course, all this green means our vol friends are mostly red to start the show. VIX, when we kicked off the show, is at about a 1330. Down almost 0.75 of a point, about 0.7 of a point. VVIX was at about a 77, down about 2, actually about 2.5 if you want to be precise, 77.5 out there. So, of course, we said this before as well. When VVIX starts getting down to about a 75, it's when you maybe want to perk your ears up and start paying attention because if past is prologue, it tends not to hang out there for long. But you never know. We could have a 2017 come along as well. All vol is annihilated, in which case we hang out here for a while. But that's usually the exception rather than the rule. All right, a lot to unpack in the world of volatility, Scott. So have at it. And also, whenever the mood strikes you, just tell me to stop, and I'll stop the random number generator, sir.
All right, let's stop it right now. Keep everybody.
There we go.
Get rid of the anticipation.
All right, get rid of the pins and needles for the listeners. All right, there we go. Who did you pick that? Oh, that's Chi-Town Indy. I was just talking about him on our Pro Q&A this week. Congrats. I think that's your first time winning the box, I do believe. Our producers will reach out to you, Chi-Town, give you all sorts of choices on all sorts of fun goodies out there. It's a good time, trust me. The folks who have won it, they have a good time. They like posting pictures of what they get, and it's a good time to have by all. So congratulations, Chi-Town Indy, adding yourselves to the hallowed halls of Pro Trading Crate winners. You want to join them, maybe get the March crate, theoptionsinsider.com/pro. is the place to go. All right, a lot of fun business already, Scott, but what's been catching your eye out there in a kind of weird week for the market?
Yeah, a weird week for the market. You know, the anticipation going into the month, especially coming off of a good January, was that, you know, we're going to see some profit taking. February is historically not a great month for the market, but yet here we are 2 months in, best start to the year in 5 years since 2019. And, you know, it wasn't quite a straight line up, but boy, towards the latter part of the month, the momentum seems, you know, somewhat I don't want to say unstoppable, but there's a lot of tailwinds in the marketplace right now. A lot of people think that we're approaching a bubble. I'm not one of those.
So you're feeling the full bull euphoria. You have the bit in the teeth, forward, green, and nothing else, Scott.
No, I'm not. I'm not that bullish. I just don't think we're in bubble territory. Are we going to have some pullbacks every now and then? Of course, but it's really surprising to me, Mark, that the whole landscape of the Fed potential rate cuts has shifted and shifted dramatically over the last month, and yet the market has just accepted it. The market has just taken it like, okay, we'll be here for a little bit longer. The biggest thing to me was, when we ended last year, started this year, the market was pricing in, basically 6 cuts this year. The Fed was at 3. Now the market is in line with the Fed, but yet here we are at all-time highs. I find that a little, a lot, very much of an oddball, to be quite honest with you. And I know we're going to talk a lot about vol and VIX and protection, and now is it's the perfect time. You and I have had this conversation before. I know I've said this quote to you before: buy when you can, not when you have to. And boy, vol is awfully low for being in these levels that we're at. And for someone that may just want to have, a little bit of peace of mind, let's talk about that VIX and protection.
Yeah, it does seem like the bulls are all in on the Fed unless the Fed argument in the data disagrees with the bullish position. Then they're all in on whatever keeps the bull going is what they're in on at the end of the day. That's a conversation for another day. We won't go down the rabbit hole with the Fed right now. But you mentioned kind of the use case for vol. We're going to get into all those products, all that fun in a second. But let's start there. You guys over there at Prosper with your clients, what is your use case for vol? How do you approach it? How do you tend to trade it? When your clients come in, are you talking to them mostly about SPY, maybe 0-day SPX? Are you trading the VIX options, some of the ETPs? What is your typical use case? How do you approach trading vol over there?
Mostly SPY and VIX, because it is just so incredibly liquid. For our clients, they're the easiest really to get in and out with not a lot of margin. So when we get to levels like this, 13 or so in the VIX, and you're seeing the vol curve, maybe flatten a little bit, I'm always going to have protection. I'm always going to buy that. I mean, that's just the way I traded back from my days on the floor. It's the way I trade right now. So whether it's buying some downside in SPY or some upside calls in VIX or some butterflies in VIX, always going to have them in my pocket.
And, you mentioned vol is cheap. I mentioned vol is also starting to get fairly low again. That's a cycle we watch a lot here on the show. I'm always waiting for the other shoe to drop out there and for this to be the moment where that cycle doesn't really hold. Do you think we're in another one of those paradigms, Scott, where we drift down to about a 75 in VVIX and then something else happens to juice up vol again? Are you feeling that in your bones, sir?
I mean, I look at the charts and I've experienced it live, and you're right. That 75 level, that is just pretty much a line in the sand, right? So, what is the next shoe to drop? I mean, there's just a lot of things out there, Mark, whether it is geopolitics or geopolitical events, something going on in the Middle East, whether it's politics here with the election coming up. We averted another shutdown, so that's behind us. But at any one point here, there's always something that can spook this market. And the AI craze, which I think is going to continue, there could be a day we wake up and all of the algos and the HFTs out there say, nah, you know what, way too frothy, no more. And that could take the market down a little bit, in which case we would see a very quick spike in the VIX. So yeah, that 75 line in the sand area in the VVIX, it's got to be a buy point.
All right, let's keep on rolling here. Listen, let's get out to the land of the vol surface first here. Coming into the start of the show, no surprise, that front portion of the curve is down. April future down about 0.5 point. The March front future down about 0.6 of a point. So not a lot of surprise there. It might surprise some still, if you haven't listened into the show for a while, it might surprise some that we're still north of a 20 handle in that October future. Again, shouldn't come as a mystery to any listeners as to why that is now. Of course, election time, we're at about a 2040 in that front future, at a 2040 in that October future, 14 even in that March future as we kicked off the show. So over 6, almost 6.5 points worth a contango all the way up to that October cycle. So I'll leave it up to you folks whether you think that's overdone or not. I know the last time we had this conversation was exactly 4 years ago. And then all of a sudden, something else started happening right around this time in the year to dramatically supersede any thoughts of election fall. I wonder what that could have been. But yeah, that's an interesting thing to still see that 20 handle out there. Scott, what's catching your eye out there, if anything, this week in the volatility surfacer?
So I was discussing this with my Prosperous students just a little while ago. There's a trade that went down today in the VIX, which you may look at it on the surface and say, how could that be? So it is a put spread, and it was the April-May 15 strike put spread, and it looked to be a roll. And that was done at zero, okay? Like no cost. So, someone looking at that may say, well, how could a 1 month spread trade for zero? There's no dividends, that's not coming into it. And I think what that tells us, and this is just one particular trade, this is not overall sentiment of the market, but what that tells us is that there's some people out there, or someone out there that is thinking that vol is going to hang in there, maybe even spike a little bit up till that April, future expires, and then we're going to just kind of drift lower from there. So when I look at that, that is a real oddball to me, especially when currently right now, let's see, there's about a 50-point swing from April to May future in the VIX right now. That one stood out to me. But, the futures curve in the VIX has been flattening out. That does really say that there's some complacency out there, even with all of these events that could possibly happen out there, even with the Fed, even with, next week we've got the big jobs number, with now that we've got PCE behind us, that's going to be the next eco data point. And, that it seems a little light to me, honestly.
Yeah, that's giving away a whole month for not much. I'm looking at it here. A 20,000 lot went up this morning. Scott, looks like I have it here for 2 cents, but still 2 cents, zero, not much of a meaningful difference. It might as well have been effectively zero here. Yeah, listeners, $1.45 for the April 15 puts versus $1.43 for the May 15 puts expiring on the 22nd there. So, yeah, you don't see that too often, Scott. People just giving away a whole month for nothing. What could possibly happen in a month in VIX, Scott? Nothing. Why would you want anything for that?
Oh, the market's just going to continue grinding higher and vol's going to go lower, right? That's.
I think you're right. I think that does speak to the kind of the complacency we have seen out there. And even when we do get some of these moments, some of these little sell-offs out there, off 1.25%, 1.5%, one of the most challenging trades in the vol space has been for some time monetizing any upside calls you have in VIX. It's you have minutes, if not seconds, to get those off before the reversion kicks in, and that's it. You're out. So that I think they're probably banking on that a little bit too. Even if there is that moment where they're kind of white knuckling for a little bit, it's not going to last long. Oh, I don't know.
No, there's no doubt about it. I think you and I talked about that, touched on that a few weeks ago, that when we have seen these little blips, these little spikes, unless your timing is darn near perfect, it has been very hard to capitalize on that.
Yeah, I mean, I think when you and I were down on the floor, we came back at the end of the day to our risk managers and told them we did a 1 month spread or roll for nothing, 2 cents. What do you think that conversation would have been like, Scott? I don't think it would have gone very well.
No, it would have been either you better turn in your badge right now and go find another job, or if you ever do that again, ... So
yeah, I just don't. I mean, obviously, it must have been facilitated by a firm. They had a good customer they wanted to make happy. That's the only reason I could see why anyone would want to put this up for somebody. But yeah, that's especially, you're right, given the fact it's not like those two futures are flat to each other. There is some distance between them.
Exactly.
Yeah, I don't know. That's a weird one, listener. Speaking of weird stuff, printing in the VIX options, we might as well get into it right now in terms of the paper out there. And is there a ton of it on the tape right now? The answer is not really. It's a lot better than it was this time yesterday. This time yesterday, we were at about 150,000 contracts in VIX. So there was a whole heck of a lot of nothing going up yesterday, listeners. Today, by comparison, far more respectable. 336. Still not blowing the doors off. We're not at 600, 700, a million contracts already, but 336, decent compared to yesterday. And also when you see that it's against an ADV of only 712,000. So we're close to halfway there. That ADV has come in over the week as well, down about 22,000 contracts. And in terms of the top 10 in VIX land, what's dominating the tape out there right now? Well, those of you out there who are on the put side will be happy to know there is still one put to be found in the top 10. You might have to wait a little bit this week till we get to it. Spoiler. Cost you 183,000 contracts to break into the top 10 in VIX land this week, listeners. That's not a ton, but it's respectable, all things considered out there. That gets us to the March 18. So right off the bat, we're at what I would consider a somewhat reasonable strike, especially when you look at the rest of the strikes we're going to talk about. The 18s kind of stand out. 183,000 of those in March, followed by number 9, 187,000 of the March 19s. Also, dare I say it, respectable, somewhat normal type strike. Number 8, now we get to it, 200,000 of the AUG 47.5. So that's too far for you listeners. Allow me to present number 7, 215,000 of the March 47.5. Yeah, it's 47.5s for days. Somebody has this 1x5 on and they just love it, listeners. And if it's not the 1x5s, it's number 6, 220,000 of the May 60s. So we're all over the place with strikes yet again, listeners. Number 5, here's our friend, 225,000 of the March 14 puts. Interesting. I may have an axe to grind on that strike these days as well. Number 4, 227,000, right back to it, May 47.5s. Number 3, 264,000 of the March 17s. Dare I say it, the most reasonable. Well, next to the puts. The puts are pretty reasonable too. These two are the most reasonable. 264,000 of the March 17 calls. Number 2, 270,000 of the April 20s. And the number 1 size position, again, given what we've seen out here in the past, this is not that outlandish either. 355,000 of the March 20s. Yeah, just a lot of bonker stuff. Before I get into the paper for this week, Scott, I'm curious, have you been watching some of this VIX paper? Someone out there really loves this 1x5. I believe it's the 2247.5 1x5. They put it on in just about every month that exists now, and I've done it for size. Short 1, long the 5. We see these ratios a lot, not usually that wide and that much of a ratio. Are you a fan of these VIX upside type trades, and have you noticed this 2247.5 1x5 going up for size?
I have watched it continuously, and I don't like actually either side of that, because when you're long the 5, you're playing for the big explosion. You're playing for the big, 2 standard deviation move, big spike. And when you're long the 1 and short the 5, sure, if you get a grinding move higher, that's good. But if you do have that, oddball event, that black swan event, you're in trouble. So I'm not a fan really of either side of that. When we do ratios, I'd rather keep it more like a 1x2, 2x3, something that at least does not have the blowout risk to it per se. But yeah, I've been watching that, and you're right. Somebody loves that.
Yeah, I'm not a huge fan either. It's too wide, you're right. The 1x5 I definitely don't like. I definitely don't like it if they're buying one and selling two, which I don't believe they are. That's insanity to me. That, of course, yeah. That's, the old don't be net short units, especially in a product like VIX, let alone short 4 of them. That way lies ruin. So yeah, I'm not a fan of that either. And you're right, just doing it that wide, there's a lot of problems with that. 1x2, 1x3, a little bit tighter. I could see some sense selling 1 buy and 2 buy and 3. 1x5, that wide, not a fan. Maybe are you folks a fan, listeners? It's been going up for a while, so somebody's a fan. Clearly they have something else against it. They're probably not just doing this, but still intriguing to watch. Let's see if anything else was intriguing out there on the tape this week. We'll start today. Scott already mentioned kind of the thing that's leading the dance out there. That put spread, that's why the April 15 puts are number 1 today, listeners, with about 24,000 contracts on the tape, followed by number 2, almost 24,000 as well, of the April 17 calls. Number 3, 20,000 of the May 15 puts. Again, I'm sure you'd probably buy that spread for nothing. Would you sell it for nothing? Or in this case, 2 cents? I don't know, listen. Hopefully the answer is no. Number 3, 20,000 of the July 17s, already out to July. And maybe it's our old friend who loaded up on the Feb 17s. Maybe he's back in July. And then rounding out the top 5 on a pretty light day, listeners, 19,000 of the March 40s. Yesterday, like we said, just an anemic day. Nothing on the tape. 311,000 contracts. That was the total volume for the day. So a whole heck of a lot of nothing. The big dog, such as it was, 30,000 of the March 21s, followed by 22,000 of the April 14 puts. Number 3, 19,000 of the March 13 puts. So getting a little bit of downside, making its way into the top 5 yesterday. Number 4, 15,000 of the March 40s. So somebody's liking this 40 strike yesterday and today. And number 5, 14,000 of the April 20s. Wednesday, similarly anemic. A little bit more paper, though, about 100,000 almost exactly. 412 on the tape on Wednesday, the big dog on Wednesday. 30,000 of the March 14 calls, again, followed by 26,000 of the March 17. 25,000 for number 3 of the SEP 20s, 2 O's. Number 4, 25,000 as well of the SEP 20 puts. It looks like we've got a little bit of opening. Could be a synthetic, could be a straddle. Interesting. I'll have to go in and dig a little more to see what went up there. And number 5, 23,000 of the March 26 puts. And then Tuesday, one of the more active days of the week, but still not that impressive. 559,000. 24,000 of the March 12 half puts. Now we're getting down there for number 1, followed by 23,000 of the March 20s. Number 4, 22,000 of the June 25s. Number 4, 22,000 as well of the March 15 half puts. Very interesting. And number 5, 21,000 of the March 13 half puts. So maybe a little bit of vertical action there. And then Monday, the big dog, 550,000 on the tape. Big dog in air quotes. Not that big, listeners. But there was an interesting print. Again, our old friend back up to his business. We've got the 47 halves going up 75,000 times again in September this time, listeners. That was a big dog for number 1. Obviously part of our 1x5 out there again. Followed by number 2, 41,000 of the March 12 puts. Number 3, 29,000 of the March 13 puts. Number 4, 23,000 of the May 20s. And number 5, 21,000 of the March 12 half puts. We did note last week, listeners, as well. We saw somebody coming in buying a bunch of the March 13 puts for 18 cents last week. And kind of an interesting trade. So I don't know, Scott, anything catching your eye outside of today's put spread in the land of VIX options this week? And are you a fan of these? They're looking pretty good right now. March 13 puts for 18 cents.
There's not a lot that really stood out, to be honest with you, other than these 1x5s. It's been a pretty quiet week overall for VIX, other than seeing that VVIX coming down to those levels that are certainly at a buy area. Volume has been, as you just kind of said, anemic. I would say the one thing maybe that has stood out is put call ratio, or should we say in the VIX, it's inverted. So call put ratio typically on any given day is around 2.5, 2.6 to 1. And that has been trending lower a little bit recently, which I think kind of fits into the realm of there's some complacency out there.
I'm looking here while you were talking here. It looks like that 20, I guess we'll call it straddle for lack of a better term, went up 25,000 times again on the 28th. Looks like they did it for $6.83, 25,000 times. Again, like everything else in VIX land, mid-market, so it's hard to tell if they were actually buying or selling or legging into a synthetic. Obviously, on the 20 strike, you're talking more about the puts. Those are around $4.50 versus $2.25 for the 20 calls. So kind of interesting. So right around a 14 handle, actually. So you like that? Straddle, the 20 straddle, listeners, $6.83. Again, mostly looking at the puts in that equation, but an intriguing one. Would you be a buyer or a seller at that level out there? All right, let's keep on rolling out there into the land of the VIX ETPs. Before we get into those, Scott, I'm curious, for some of our guests, they don't like the vol ETPs. They prefer the mothership, the pure, if you will, VIX and SPY SPX approach. What is your use case, if you have one, for the vol ETPs, and which ones do you tend to watch?
Yeah, we don't really watch them too closely, to be honest with you. I think, most of our students, our traders are of the same mindset that you just mentioned. VIX is still the go-to, the most liquid, though not, I wouldn't say easy to understand, probably the easiest to understand of the vol products, other than just looking at something like a VVIX and say, well, there's no options on that, but you can say, okay, 75, I'm buying it. So the ETPs our students really kind of stay away from.
Well, I guess the show is over then, Scott. We're good. We're done.
No.
We're going to keep on rolling out into the land of those ETPs, listeners. Let's get out there to some people's favorite, some people's least favorite. Our buddy, Mr. Dr. VIX, on the show last week. He's been the biggest proponent of SVIX I've seen out there, and it's hard to fault him. It's been a great trade if you own the underlying, maybe writing some selective calls against it. Even he's saying, you know what, it's getting kind of lofty, getting kind of frothy here. I'm out as of last week. Some of that was, of course, he had to travel, so he didn't want to have to babysit it. But also, you could also reasonably see that as well. We're at about a 41.25 right now. It's up another 1.25 points since our show last week. At a certain point, you have to say VIX is starting to get into the fairly low range. It obviously can get a little bit lower, but the question has to be, how much lower can VIX get reasonably? And also, as a result, how much higher can SVIX get reasonably? They are linked at the end of the day. This is an inverse product, so SVIX has some theoretical ceiling to it. What it is, I don't know. We haven't hit it yet, but it is there. So those of you out there who've been enjoying this bullish ride, I could see why maybe you want to get the heck out of Dodge, or at the very least start maybe aggressively overwriting some calls out there, because we get a nice little vol pop. I know I've said they're few and far between, but if you do get any of that, then we could see a little bit of a reset out there in SVIX as well. In terms of paper out there today, looking actually fairly decent. 4,500 contracts on the tape, the ADV 3,700, so actually exceeding the paper out there today. What is the big dog position out there right now in SVIX? Looks like maybe somebody taking that advice. 5,500 of the March 45s. I'm going to hope for their sake they're overwriting the hell out of those. If you're buying those, yeah, you got to really be optimistic, let's just say, out there for all things SVIX. Let's look really quickly and see if we can find when they put those on, listeners. All right, here we go. They started buying these back not that long ago, actually. They started buying them back on February 13th. It looks like they overrode them. That's right, for about 20 cents out there. So I can get behind this trade. If you got a bunch of SVIX burning a hole in your back pocket, overwriting the hell out of the 45 strike is not the worst thing. You're not getting a ton for it, but you'll also be probably pretty happy to let a bunch of SVIX go at 45. Whether we can threaten that strike or not, that remains the open question. But that is the big dog out there, followed by even more, shall we say, optimistic, the March 50s. 1,700 of those out there. In terms of what's trading out there today, back there we go. All right, yeah, about 1,100 of the March 40s going up out there today, expiring today as well. That's interesting. So it looks like some folks taking some 40s off the table out there today. If you're short those and you're buying them back, I don't know. I have to ask why. Just get the heck out of Dodge. But hey, there are crazier things. I know, Scott, when this product was first brought back a couple of years ago, there was a lot of hand-wringing over the return of inverse volatility. A lot of people thought, how dare they bring back a product like XIV? Look what happened the last time. Look what happened in Volmageddon. XIV went the way of the dodo, took a lot of people's money with it. How could the regulators approve such a product again? I'm curious for you, where do you fall on the inverse vol product? Do you think they're interesting, or do you think this is a product that should not exist?
I do think they're very interesting, but honestly, for the more sophisticated, advanced trader, I think that the retail trader, the casual trader out there, it can be a very complex asset. It can be a very complex tool, because it's hard enough for many people to understand, honestly, the complexity or the philosophy that VIX is an inverse relationship to the market. And then you have an inverse of the VIX. So I think a lot of, just casual retail traders can get very confused with that.
Well, if they want confusion, we got even more for them, Scott, because we got the levered side now. UVIX, the 2X product, obviously, typically an erosion beast, and kicking into that gear again this week after a brief flirtation north of the 10 handle. Back below it again, listeners. 970 as of a few minutes ago. Down almost a full point, about 0.8 of a point. Actually putting up some paper out there today, about 14,000 contracts already. The ADV is 15,000. That's unched on the week, so it looks like they're going to hit it out there today. In terms of paper out there, the size positions, it's still dominated by that 20,000 lot of the April 12s. We talked about them before. They opened them a little over a month ago now for almost $3, about $2.70. They had a brief shining moment in the sun. A few weeks ago, they closed when we had that vol pop at $3.74. So they were looking at a full dollar 20,000 times, not the worst thing. Obviously, they have something else against it that they were probably wearing it on, but in those scenarios, you might want to consider maybe monetizing some of that hedge, especially in a incredibly wasting asset like UVIX. If you buy VIX, a little bit of a different story. We say before you have a quick time to get out, but when you're talking about UVIX, if there are pops, they're even shorter lived if that's possible. So yeah, this is a difficult asset to hold on the upside long term. And that's reflected right now. They're printing for $1.09, $1.10 right before showtime today. So they're wearing it on these again. So they may come to regret not monetizing at least some of that hedge to make it a little bit worth your while. Otherwise, what are you doing? At a certain point, got to do something with your hedges. Aside from that, the big dog out there today, listeners, in terms of UVIX, because they are actually printing a little bit of paper out there today. We have about 3,000 of the 10s. Interesting. So that 10 strike, even though we're at about 9 3/4 right now, continuing to dominate. Those are expiring today as well. So it looks like some folks playing fast and loose, all opening 3,000 times, a little bit of 0 day. I know, technically, don't get mad at me. It's not listed today and expiring today. All you market structure geeks who love to point that out. I get it. It's expiring today and it's all trading today. So it's effectively a 0 day contract, even if it wasn't listed today. I get it. All right. Scott, I know you're not a fan of the inverse side, so I'm guessing the levered UVIX, not a big use case for you over there as well?
Not typically. I definitely follow it. There's no question about it. But, Mark, you just mentioned something. You just hit the nail on the head that when you were talking about that 20,000 lot of those April 12s, you said, whoever has that probably has something else against it out there. And I think that, again, the retail, trader, the casual person has to remember that these products, these inverse products, are really used as a hedge, at least in my opinion, for more institutional players. They have something else out there, and they're running a scan through their 15,000 different things that they could hedge with, and this comes up. So I think you have to be very careful when you watch the paper flow in any of these. And, I don't want to say don't listen to it or don't buy into it, but just take it with a grain of salt, knowing that in most likelihood that what you are seeing is a hedge against some other position that a big player out there has.
Definitely agree. It's just so aberrant to do it in UVIX that it definitely caught our eye. We see it in VIX all the time. UVIX, that's a strange choice for that. So that more than anything, maybe just the use case around it and maybe why you shouldn't do it is informative in and of itself. How about, a lot of people come to these products, Scott, just to play the erosion trade. We talked about a fairly steep contango in the VIX futures right now with the front future around a 14 even, going out to October, you're at over a 20. So you're talking over 6 points worth of slope out there. So if you're out there for the contango trade, it kind of looks all right now, even if VIX itself is getting at a fairly low level. Is this a use case for which you would maybe look at some of these vol ETPs?
Yes, for sure. If you're the old, and I'm going to throw a name out there that only traders from the floor or older folks like me would understand, or Fawcett, right? Fawcett was a premium seller no matter what. He was selling, and the traders that were part of his group were just sellers and looking for that premium erosion. And that's, this is a product that you get that in, but you have that risk where if you do see that blip in the market, that can explode against you pretty quickly.
Just goes to say, sell the preem and live the balloon dream, right, Scott?
Yeah, there you go.
I've heard stories about the guys who traded for him, and if they came back to the office with any positive position on any strike, they got read the riot act. These options were not to be bought.
Oh yeah, there is no question about that. And I traded with many of them, and to me, it was just a different kind of trade. I was typically trading from the long side. Always wanted to have units. Certainly, there were opportunities to sell when vol popped. So to me, that was like a foreign world.
Yeah, very interesting. A very insular use case for options. It kind of existed in that one window when you could kind of get away with that. Once the, I think, late 90s, early 2000s started hitting, we saw the big dot-com boom and obviously all the massive booms and busts we've seen in the market since. kind of hard to get away with that aggressive short premium approach, but there was a period there where you could do all right. Obviously, you could fly balloons around the world on it if you wanted to. So, intriguing. I haven't heard that name in a while, Scott. Bringing up some interesting memories out there.
Told you I was going to date myself back here.
All right, let's keep on rolling. We kind of mentioned UVIX and the ever-wasting, ever-eroding April 12s. If past is prologue, they probably won't work out well. But then again, they got something else. So they're probably very happy. They're probably very aggressively short some vol out there. So they won't be that sad. But still, intriguing stuff nonetheless. UVXY, this is the debate we've had many times. I don't think we'll go into it again this week. UVIX versus UVXY. 1.5x versus 2x. Liquid versus not the most liquid. Let's just put it charitably. If you heard my saga about getting out of my UVIX puts on options oddities last week, you know some of the pain of that lack of liquidity, or let's just say not as liquid as UVXY. There's liquidity there. You just gotta work to find it. UVXY, though, putting up some numbers again. 57,000 today. Actually kind of a light day today versus an ADV of 105,000. So it doesn't seem like they're going to get there today. But again, the day is young. UVXY at a 670, down about 0.4, almost half a point from this time last week. Starting to get into that zone again, listeners, certainly south of 10. You start threatening a 5-handle, then we're talking, reverse split time again. So we'll see when the UVXY folks get about that. In terms of the size positions out there in UVXY, it's the 7 calls expiring today. Again, we're at a 670 right now. 77 calls, 23,000 of those bad boys going up out there. It looks like we got another 7,700 going up today. So it looks like some folks probably getting the heck out of Dodge on those, earlier this morning while they had any chance, because those are pretty much gone now. What's still around, though, is our old friend VXX. Again, when we talk about all these other levered products, sometimes it's hard to get excited for the quote-unquote plain vanilla VXX. And also, it's had a lot of issues. Scott, have you followed the saga of VXX over the years, the myriad issues they had with Barclays screwing the pooch with their liquidity and all sorts of other issues they had where a lot of people washed their hands of this product? And are you in that same camp?
Absolutely. And you talk about, popping the balloon. That's exactly what happened there. And VXX is another one of those products that, you look at this and you have that natural just implosion of decay. And I think you really have to understand the whole volatility suite to trade a product like this. And SIBO does a great job of explaining it. I wouldn't say it's for the casual reader or the casual trader once again, but of all of the, alternative volatility products out there, I think VVIX, sorry about that, is probably the most liquid and the easiest one to trade for the casual retail trader.
Yeah, it's a little bit quieter. Dare I say it, plain vanilla. I kind of famously washed my hands of it as well the last time it had the massive issue. I'm never comfortable with a product that falls apart through no issue of the market, just an issue of its own fundamental mechanics and the issuer. That's never exactly a source of confidence, Scott. So that kind of washed my hands of it. We watch it here on the show. I know some of our other cohorts, the Rock Lops and others, have started dipping their toes back in. I have not yet, listeners. I found my attention pulled elsewhere to the, dare I say it, the sexier stuff like the UVIXs and others out there. I don't really see the use case for VXX right now. That said, 43,000 contracts going up out there right now versus an ADV of 66,000. So some folks are trading it. It is still a pale shadow, a mere husk of what it was back in the glory days when it would outpace VIX options some days. We used to talk about that on the show. It used to be the tail wagging the dog days where, VXX is putting up numbers and VIX was kind of sleepy. But you don't really see that much anymore. VIX is now roughly 10x this. So a different beast in terms of the size out there, 26,000 of the March 14 puts out there for your size positions. Let's get into an aspect of the vol space that maybe resonates more for some of your clients out there, Scott, which is, of course, all things earnings vol. I'm not sure if you're aware, but we saw a little bit over the last couple of weeks. Have you heard of this name called NVIDIA, Scott?
I think I missed the whole earnings cycle. That is, this earnings cycle, and it actually started last one too, but the SKEW out there in particular names, especially the tech names, the call skew has been almost to the point that I haven't seen since maybe back in the dot-com bubble. And even back then, we didn't fully follow skew like we do now. And if you don't mind, I want to point a few out for you right now that are like at the top
go for
of my
it.
rate. So if you look at CrowdStrike, okay, with earnings next week, okay, if you look at the downside puts, and the stock's 315 right now, so I'm going out, $50 or so either direction. So if I look at the 265 puts next week, Mark, those things are trading $2.80. If I go out $50 on the upside to 365 call, those are trading $4.80. Okay. Adobe has earnings in a couple weeks, not even next week, but in a couple weeks. 10% out of the money puts trading $4, 10% out of the money calls trading $6. Even a stock, and this one is just, I don't get it. Abercrombie and Fitch, just a few years ago, left for dead. They have earnings next week. 20% out of the money puts trading $1.30. 20% out of the money calls trading $2.90. So you're seeing this in these individual stocks, and it's been like this for a while. But then if you go to the ETFs, then if you go to just the Qs, for instance, there's no skew at all. So it's in these individual stocks that the public, the demand is on the buy side for the upside. And for those of you that know how to trade conversions or understand that, there's a massive opportunity there. We're not going to have that conversation right now, but there is a massive opportunity there.
Yeah, even Abercrombie. That's not exactly the sexiest of names these days. Wow.
No, and that's why it popped up on my radar today, because of this massive, massive skew.
I remember you brought this up when we were chatting on one of our other shows a few weeks ago. Since then, a few others have made the same comment. So I've been digging into some data because we have some listener questions about this. Are we back at those levels back in 2021, Scott? And, anecdotally, you might want to say yes. And now it's looking like empirically, we can kind of say yes as well. Some data just coming out of the SIBO a week or two ago. So it might have evolved a little bit since it came out. But they were saying, looking at the broad spectrum of S&P 50 single stock skew, saying it's remained extremely elevated back through 2022. But right now, absolute levels are now approaching the extremes we saw in Q1 2021 during the height of the meme stock era. The flattening and skew, again, remember, flattening is skew listers. They usually talk about skew in terms of the put wing. So when they mean flatter, that means the puts are less bid, the calls are more bid. And they say that here, the flattening and the skew is both a function of falling demand for puts as well as elevated demand for upsides calls. So yeah, Scott, the macro broad data backs you up. We are approaching, once again, that rarefied air of Q1 2021, Scott.
Yes, and what I would tell people is just be careful with that. Just be really careful. There's certainly opportunity out there. There's ways to create spreads to take advantage of that skew, but just be careful. But we're doing a lot of that with my students here. That is what we are doing on a daily basis, and especially during this earnings cycle, we have been really focused in on that skew.
Yeah, I mean, if you're bullish Abercrombie, they're going to give you that much juice for the upside. At the very least, a nice cheap vertical doesn't sound too bad, right? Take advantage of that upside. Buy things for much cheaper than you can historically. Listen, that's always a good way to go. If you want more data on earnings vol, listeners, luckily for you, we have it over there at the website, theoptionsinsider.com. Click on the Options News and Articles tab. Once you're there, you can go deep down the rabbit hole of all of our different earnings move results, earnings season reports. All of it available for free for you folks because we love you, courtesy of our friends over there in Orat's land. Right now, this season standing out, bit of a banger, as you might expect, 124% versus our long-term average now. We've been crunching these numbers for a while, many years. The long-term average is also pretty impressive at 104%. Remember, 100% means everything is moving exactly as much as was priced into the straddle. When you're above 100%, things are outperforming, and that is the case right now at a whopping 124% with 813 names reporting right now. So about 95% of the big names are in now. 124, that's impressive. You know what else is always impressive? It's your questions. Let's get to it now. A little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to your Vol voicemail. You guys can get at us in no shortage of ways at Options on most major social media platforms. Questions at theoptioninsider.com works. Or, of course, if you're listening live, you can always chime in there as well. A lot of people talking about your buddy, Mr. Fawcett there, Scott. Nichols saying Fawcett, very old school name. Didn't realize he was a size option seller, though. Just thought he was a balloon guy. Yeah, most people knew him through the lens of ballooning. But yeah, he was able to afford those balloons by selling a whole heck of a lot of options. Option God said, yes, didn't know it either, but makes sense that he made his money through options so he could fly in his balloon. Yes. Yes, that is the case. Let's get out there to some of our questions we had going on this week. We asked you last week. I think we kind of know the answer to this, but nonetheless, let's see what you folks thought. We asked you, hey, everyone laser focused on NVIDIA earnings, but how important is this announcement really to the market and to your portfolio? And 59.1% of you said it's very important. I think we saw that play out in the marketplace. 22.7% saying not much, it's overhyped. I get the sentiment. The movement's kind of hard to argue with. 18.2% say it's about as important as the other big earnings out there. Our questions of the week this week, we have a couple of fun ones, Scott. First off, our big question of the week, the one that's expiring in a little bit, again, going back to NVIDIA. With NVIDIA in the rearview mirror, everyone was all hyped for NVIDIA, Scott. But now, what's next? What is the big market event that is driving your trading now? The next one. Gave you three choices, actually four choices. Gave you next Fed meeting, next earnings season, not much until the election, or the next CPI number. Scott, what are you and your clients over there? What are you focusing on? And then more importantly, what do you think our audience is choosing?
Well, can I put in a choice E?
Yeah, you can have a write-in. Go ahead, sure.
Next Friday's jobs report, February jobs report. That'll be the next thing that maybe moves the needle for the Fed. So yes, we have some earnings prior to that. That's going to be the next big one. So CPI is afterwards, and the next Fed meeting is afterwards. That'll be the next. If we see a really, really robust number there, your market's not going to like that. If we see something in line, something a little bit tamer, well, then you may see a reaction kind of like we did today with the market. So to me, that's the big one.
No, it's funny we say that. We think the market won't like it, but they've shrugged off some pretty hot inflation numbers over the last couple of weeks like they were nothing. So I don't know what it's going to take to derail this market, if it's even possible at this point. In terms of our audience, 61.3% saying you're all in on the next CPI number, followed by 25.8% for the next Fed meeting, and then about 7% each for a tie for third between the next earnings season, and you're not really watching much until election 2024. And then we had a silly question of the week, Scott. Yesterday was Leap Day. We said, in honor of Leap Day, how do you use your leaps in your options trading? Gave you three choices and the infamous other listeners. Stock substitution, income, so you're selling longer-term covered calls or short puts, or you're going the long-term hedging route. Scott, are you a fan of leaps? If so, how do you use them? And then B, how do you think our audience is using them?
Okay. Number one, I am a fan of leaps, more so when I was trading on the floor, because it was great liquidity actually to use against other positions. So leaps, when they first came out, a lot of people didn't understand them. I loved them. Leaps now, as a retail trader, I think the one downfall is people don't really understand that when there is a big change in vol in IV, that these leaps can be all over the place just because the vega, the volatility component of them, is so great. However, I have a lot of people that like buying leaps and just sell every month against them, almost like, owning a stock and doing buy rights and selling calls against them. So I am a fan. You do have to understand them. You do have to understand that when there is a big change in vol, either long, up or down, they're going to affect that option more than any other option on the board.
Well, our audience, let's see how they're using leaps. Stock substitution, that was their big choice, 62.5%. I could certainly see that's a good use case for leaps if you are going to use them. Puts a lot of the Greeks in your favor versus just owning the underlying. Certainly more capital efficient as well. Then we have pretty much a tie, around 12% for all the rest. Income, long-term hedging, and the infamous other. Let's see, what did you folks choose for other? A lot of people wrote in for fig leaves, which is effectively, that's Brian's favorite. Spoiler alert. He'll be joining me on Options Oddities coming up in a little bit, so stay tuned for that. But yeah, fig leaf is his specialty. That's just a stock sub with a covered call thrown in for fun out there, listeners. So intriguing stuff out there. Really quickly, I have this question coming in from YouTube as well. This got posted like right after our show aired last week, so I want to make sure I get to him really quickly as well. Comes from the creatively named D81350 on YouTube. I know a lot of you like to listen on YouTube. If that's your use case, have at it. He wants to know, what was the dampening impact on UVXY that was referred to at 44.43? Even includes a timestamp. Very nice of him. He was talking about Russell. Makes Russell prefer UVIX over UVXY. Yeah, he was just talking about the fact that UVIX is 2x levered versus UVXY. We jokingly refer to it as neutered. It's 1.5 levered. If you want to know why, go back and look at the Volmageddon in February of 2018. They pretty much effectively neutered UVXY overnight. A lot of people, including myself, had some positions in there that did not do well, and I haven't really touched UVXY since as a result of that. So yeah, that's what he means by UVXY being neutered versus UVIX out there. All right, but now it's time. Scott, I hope they prepared you, sir, because it's time to get difficult. It is time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball, the portion of the show where we attempt to wrestle with the vol gods, see what they have in store for us for the coming week. And spoiler alert, not a heck of a lot going on on the VIX front since the start of the show. We were at a 1330 at the start of the show, and we're pretty much there at the end of the show, a little bit below it, right around 1327, 13.25 or so. All that a long way around to saying no joy for me. I was the closest. I was feeling the least vol at a 13 double. Not going to do it unless we get a nice last-minute spike. Let's see if I can talk for another 30 seconds, listeners. But unfortunately, it doesn't seem like it's going to do it. So no joy for me. The meatball is at a 1441, so no joy for him. Russell playing his usual role of vol buyer did not work for him either at 15.5. So no joy for us. A long way around to saying no winners this week, which, Scott, that means you get the pride of place of going first this week as our guest. What are you feeling for VIX this time next week?
I think after the announcement, after the jobs number, I'm going to go with 13.5. I think we do go in the high 14s prior to that, but ending the week 13.5, almost unchanged from where we are right now.
Yeah, see, that's the challenge. You know, how's the jobs number? Is the vol, any vol they give, any juice, is it going to still be around at the end of the show is the big question. That's what we always have to come to grips with. It's a challenging thing. That's why we say it's the most dangerous part and the most difficult part of the show, Scott. I'm feeling a little bit of vol erosion. Maybe I'm talking some of my book here, so I'm going to say a little bit lower than we are right now. 1276 for me, listener. That's your market. 1276 for me on the dark side. Scott, where I was this week, right around a 13.5. All right, listeners, that music means we've come to the end of another epic sojourn through the world of vol. Scott, how was your first time on the old Vol Views hot seat? Did you have fun?
I loved it, man. Thank you. I really appreciate the opportunity.
And before we go, Scott, if folks want to reach out to you to discuss maybe single stock SKEW or some of the vol trades you were talking about, where should they go? What should they do?
You can find me at prospertrading.com.
There you go. Prospertrading.com, the place to go to kick the tires and light the fires. We have to get on out of here. That will conclude our broadcast week for all of you on-demand folks. Hope you had a great trading week. Head out, have a great weekend. For all of you pro folks, hang out. We'll be back in a little bit with our buddy, the options guy, will be joining me in a little while to break down all the week's worth of weird, crazy, wild, unusual activity coming up on Options Oddities. Brian's already reaching out. He's got some fun trades he wants to talk about, so it should be a good time over there on Oddities. Hang out if you're hanging out in the live. We'll see you back in a little bit. Of course, you can listen after the fact on the Pro podcast feed as well. Then, of course, back again next week on Monday for a little bit of the old option block, all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.